It's great to have you back, Phil. Thanks for joining us and taking time out of your busy schedule. I'm excited about this one, so let's jump right into it. In February, you wrote an article in the Globe and Mail titled "In Defense of Short Selling." For those that don't know what short selling is, maybe you could start off by just explaining that a little bit, if you don't mind.
Sure. And first, thanks for setting this up and for doing this again. I really like these videos, and I'm looking forward to this one as well. So for those who don't know, short selling it's basically one of two techniques. You can go long and you can own a stock outright, or you can short it, which essentially means you are borrowing the company's stock, you're selling it, and you're hoping that the price goes down. Because if it goes down, you can buy the shares back at a lower price, cover the loan, and pocket the difference. So it's a great way to take advantage of opportunities where you think the shares will go down in value and where you think you can make some money doing that. So obviously you hope that the price does go down in value and the shares don't go the other way, because that's the risk. If their shares go the other way, you will lose money instead of making money. And I should say off the bat, while we'll talk about short selling a lot today, and that's the focus of this video, it's not something that I do myself, and it's not something that we do here at Contra the Heard Investment Newsletter. We're primarily or focused solely on going long and going long only on companies. So we're not interested in shorting. But nevertheless, I'm really excited about this topic, and it's something I look forward to.
Fair enough. Yeah, it's a very controversial topic, so interesting that you wrote about it. So I guess what encouraged you or made you decide to write about that?
Right. Well, there are two things really. First was in January, it was a topical issue. It was front and center. Everybody in the financial world was looking at it because of this huge war between wallstreetbets on one side, the retailers who had banded together, and then the huge funds, the hedge funds of Wall Street, who were short companies like GameStop, BlackBerry, AMC, Nokia, KOSS. I mean, there were a number of them. So it was a really almost like a David versus Goliath sort of situation where these small Wall Street bettors were taking on the big guys, and they were winning. And their strategy was very, very simple. It was you identify these really heavily shorted names, you buy them en masse in your group, and then the short sellers have to cover their position. They have to get out at a loss, and that will send the shares even further. So it really took on a life of its own. It was incredible to watch. In a small way, we got caught up in it too, because we had small positions in BlackBerry here in Canada, and then Benj had a position in KOSS as well. And I'm sure he'll love talking about those at some point with you. So you can chat to him. So in a small way, we were also involved, but by and large, we were on the sidelines watching this unfold. And like everyone else, we were kind of amazed at the speed and scale of the moves that happened in these companies.
Yeah, it was unbelievable, wasn't it? Yeah, a lot of frenzied action and short covering in the case of some of these things.
Yeah.
Yeah, so we'll have to ask Benj about that. It'd be interesting to kind of chat about that and hear a bit more. And you'd mentioned there's a second reason why you wrote this article?
Yeah, so right. So the second reason I wanted to write this article is because I've always felt that the arguments around short sellers are very one-sided or one-dimensional. Either they're labeled as villains and they're looked at as a parasite and they're unwanted, or some people look at them as kind of like unsung heroes or lone wolves who are out to show the world what the world actually is. And to me, neither of those narratives made sense. I always thought that the story and the dynamics around short selling were much more nuanced than that. So I kind of took the opportunity of the selling in or short selling battle in January to write about something I've been thinking about for a while, because I just see these one dimensional arguments, and
Yeah.
I didn't like it, which is why I kind of called this article I wrote for the Globe and Mail, I called it "In Defense of Short Selling: The Good, the Bad, and the Ugly." So I saw a number of things that are involved with short selling.
Yeah, a catchy title for sure. The good, the bad, and the ugly. So what is it that you would say is the ugly, for example?
The ugly is mathematics. No matter how you look at it, the math is against you from the start. You, as a short seller, have an asymmetric risk reward profile, because there is a ceiling to how, or there is a bottom to how low things can go, but there's no ceiling to how high things can go. So stocks, they can and do go to zero, but if you're short a $10 stock, it could go to 20 or 40 or 100 and so on. So you, as a short seller, stand to make a profit for sure, but you stand to lose a lot more. So that's the ugly to me.
Yeah, no,
The math is just set against you from the outset.
definitely. I mean, what about using options to mitigate some of that risk? Is that feasible or?
Yeah, I mean, options can work, though obviously in many cases in January, the funds weren't using them effectively and they blew up anyway. So there are short sellers out there who are exceptional and they use options and other risk reduction strategies very well. But in the case of the funds that were short GameStop, that wasn't happening by and large, and they just blew up and Wall Street bets cleaned them out. So yeah, it can work, but it's difficult,
Yeah, well, it
very
definitely is
difficult.
difficult. I mean, if you have volatility pick up while you're short a stock and options premiums go through the roof, I mean, you
Yeah.
almost don't have the option of using them at that
Yeah,
point. It's
exactly.
almost
It's
too late.
that, and there's the math again. The math is just stacked against you.
Exactly. Yeah. No, I agree. Okay, so if that's the ugly, what would you say is the bad?
I would say the bad is that hedge funds and short sellers have a bad reputation, especially the large funds and especially the ones on Bay Street and Wall Street who are doing this professionally. I mean, if you're branded as a short only shop, people will look at you and treat you suspiciously, think you're a shark, think you have questionable ethics or no ethics because you stand to benefit from chaos. If a company loses and goes under, you win. And that rubs a lot of people the wrong way. So the short sellers in the past, and I guess even now, they've been accused of exacerbating economic downturns. They've been accused of forcing companies into bankruptcy or up against a wall, and even pushing people out of their jobs and out of their homes. So that riles a lot of people up. So the hedge funds have a bad reputation because of that.
Yeah, no, fair enough. And I mean, I guess that's why the regulators and the stock exchanges will get involved sometimes. I mean, I remember in 2008, there was short selling bans all over the place in various sectors and whatnot. So, yeah.
Yeah, I remember that too. So 2008 had a lot of short selling bans, especially in financials. And then last year in 2020, I think the Europeans stepped in their markets, in their capital markets, and they banned short selling on certain institutions as well, just because the volatility in February and March of 2020 was so high that they wanted to kind of quash it before it turned really ugly.
Yeah. Okay, well, and if that is the bad and the ugly, what would you say is the good?
Well, in my opinion, there are a few good things about short sellers. The first is that in the absence of short sellers, the entire marketplace would be full of one sided betting. So it would be a long only marketplace. And one sided betting to me sounds unhealthy and in many ways it's illogical and it's not intellectually credible. So short sellers add diversity to a marketplace and they are a way for contrary opinions to express themselves and come forward. So yes, short sellers are ugly, they're bad, but they add to the intellectual diversity which characterizes a well-balanced capital market. And for that, I think that there's a really important place for short sellers.
Right. Okay. Good thoughts. I mean, you mentioned one-sided bets. I mean, comes to mind sort of non-fungible tokens, the crypto market, like Bitcoin, for example. I mean, these
Yeah,
massive moves, which you hope don't unwind, but if they do, I mean, it creates just a real mess. And then, people might be more familiar too with sort of the real estate market of Vancouver or Toronto that just is never ending to the
yeah,
upside.
yeah. I'm not sure how to short real estate.
That's right. It's a difficult one. Okay, and I guess you could also argue too that it brings a level of price rationality to the market. Would you agree? Or?
Yeah, I think it does at the margin for sure. I imagine if there were more short sellers, prices would be more rational, but they're always in the distinct minority. So, yes, I think it helps with price rationality at the margin. And my guess is that, yeah, if there were more of them, there would be more stable valuations out there. But they're always the minority because of the bad and the ugly, which we've already talked about. So they're on the back foot.
Yeah. Well, it's a funny dynamic too because on one hand they do provide rationality by selling when things are high and buying when things are low, but the flip side of that is a GameStop where short sellers get caught and they get squeezed and they end up being the buyers that create those massive
Yeah,
squeezes.
absolutely.
So
And to their own detriment too. Yep.
bit of a dichotomy, yeah. So what about uncovering financial fraud? I mean, that's another big one. You've got sort of the Enrons and the Sino
Hmm.
Forests and the Valiants of the world that have been uncovered by short sellers. I mean, how do you view that?
Hmm. Yeah, that I agree with you there 100%. Those are really good examples you bring up. I think short sellers are great in uncovering financial fraud. I think in a way they are like detectives, and they can go out and really dig through accounting practices and statements and see what a company is really doing. And many times they won't uncover fraud, but sometimes they do. And when they do, they can make regulators actually take a second look. They can alter perceptions among the public, and they can make the cheerleading fund managers kind of, back off, because sometimes fund managers are quite aggressive and long only and all that. So in that way, they are very important. And my kind of thinking on this is, yeah, hedge funds, as we've talked about, or short sellers here, they're dirty and ugly and bad in many ways, but so companies can be too. There's no two ways about it. Corporations can be very predatory. So when you have a fraudulent predatory corporation doing whatever it happens to be doing, send the short sellers after them. Let them go nuts against each other and fight fire with fire. So I think that that's quite a useful function that short sellers have in the marketplace as well.
Yep. Yeah, good points, definitely. Okay, so if you were to summarize the good, the bad, and the ugly, how would you do that in a sentence or two?
In a sentence or two, I would say it's a thankless job where the odds are stacked against you from the start because you stand to lose more than you could gain. And on top of that, most people will despise you because you're seen as predatory. But you contribute to a balanced capital market, and you can uncover fraud in the process. So that's how I would summarize short selling in a few sentences.
Okay, good. Well, thank you for all those thoughts. Great discussion, and really appreciate your time again. So, if viewers do want to read the article that we're referencing here, what's the best way to do that?
If people are interested in reading the article, they can head over to the Globe and Mail, and they can find it there. And if I am on it enough, I'll also try to get you a link. We can provide it in the video description below, and then people can just click on the link directly and read the entire article at their own time.
Okay, great. Well, thank you, Phil, and as always, it's a pleasure to have you on. So we'll hope to see you again soon.
Okay, thanks, Todd.
Okay,